Welcome to another exploration on marginal thoughts. Have you ever stopped to think about why, when you buy something online from another country or maybe hear about global trade deals, the US dollar just seems to pop up everywhere?
It really does.
Yeah, like it doesn't matter if it's oil being sold from the Middle East to Japan or coffee beans shipped from Brazil to Europe. Chances are the price and the payment involve US dollars.
It's almost invisible sometimes, isn't it? How deeply the U.S. dollar is just, woven into the fabric of buying and selling things across borders.
Absolutely. And it's not just about buying stuff, right? Decisions made here in the United States about the dollar can actually ripple out and affect trade deals happening like thousands of miles away.
Definitely.
So today we're going to try and pull back the curtain a bit. We want to understand why the US dollar holds this incredibly central, almost powerful position in the world economy.
It's a fascinating story.
Yeah, think of this as your guide to getting a handle on a really fundamental concept that shapes so much of what happens globally. We're going to try and make sense of it together.
Sounds good. It's a story with a lot of history and some pretty surprising implications, too. Today, the dollar is simply everywhere in international finance.
It really is striking. I saw some figures that show just how dominant it is. For instance, even back in, 2019, something like 88% of all international transactions.
88%.
Yeah, that's money moving between countries involved US dollars, almost 9 out of every 10 deals.
That's right. And it goes beyond just, everyday trade. Many governments and central banks around the world hold U.S. dollars as a major part of their financial reserves.
Reserves, so like a country's savings account.
Kinda, yeah.
Yeah.
A savings account in foreign money. They keep dollars on hand because they know they can easily use them to pay for things they need to import, or maybe to make payments on international debts, which are often agreed upon in dollars anyway.
Ah, okay.
This is why people call the dollar the world's main reserve currency.
So why? Why is it the go-to currency for so much of this international business? Is it just like inertia? Because it's always been this way.
Well, habit plays a role, sure. But the main reasons are really about practicality and efficiency. I mean, first off, the dollar is widely accepted pretty much everywhere. That's a huge advantage.
Okay, acceptance is key.
And it's also incredibly liquid. That means it's very easy to buy and sell things using dollars anywhere in the world without causing big price swings.
Liquid. Easy to trade, basically.
Exactly. And crucially, the U.S. banking system is seen as very reliable and efficient. That often makes processing transactions in dollars cheaper and faster for businesses compared to using other currencies.
Okay, I can see how being accepted and easy to use is really important, but how does that actually work when money's moving between countries? Like, say, a company in Canada sells lumber to a company in France, and they decide to use US dollars. Does that money physically, go to the US?
That's a great question, and it highlights a really important piece of this whole system. Yes, very often that money does pass through the U.S. banking system, even though neither the Canadian nor the French company is American.
Really?
Well, here's how it often works. The Canadian company's bank and the French company's bank likely have what are called correspondent accounts at banks located in the United States.
Correspondent accounts, like a middleman account.
Sort of. Think of it like having a mailbox or maybe a liaison office in the U.S., specifically for international money transfers.
Okay, got it. So the money moves between those accounts.
Exactly. Those correspondent banks in the U.S. often have their own accounts directly with the U.S. Central Bank, the Federal Reserve, or the Fed.
Ah, okay.
So when the Canadian company pays the French company in dollars, the Canadian bank tells its correspondent bank in the U.S. to transfer dollars from its account at the Fed over to the French bank's correspondent bank's account, also at the Fed. The money moves electronically, but it happens within the U.S. system.
Wow. So even a transaction between, say, Canada and France, if it's in dollars, it actually relies on banks inside the United States.
Precisely. And this whole system makes the payment process smoother and, importantly, more secure for both parties. They're dealing with established banks within this large, trusted financial system, even if they're geographically far apart.
Right.
And this same mechanism is why major global goods, commodities like crude oil, gold, coffee, are typically priced and traded in dollars globally. It gives everyone a common measuring stick.
And those stats you mentioned earlier about central banks holding dollars in reserve, that fits right into this picture, doesn't it?
It does. It really shows the level of trust and, frankly, necessity countries feel regarding dollars.
Right.
As of mid-2024, something like 58% of all the officially reported foreign currency reserves held by central banks globally were in U.S. dollars.
Over half.
Yeah, that percentage fluctuates a bit, sure, but it has consistently been the dominant currency for decades now.
Okay, so that's the picture today. The dollar is the global leader, transactions, central bank savings. But how did it get here? It wasn't always this way, right?
Not at all. No. The dollar's rise is a story that's really closely tied to major global events, mostly over the last century or so. For a long time, the United States wasn't the central player in global finance.
So who was? Britain.
Exactly. Before the First World War, that role largely belonged to Britain, and the British pound sterling was the main currency used in international trade. Back then, many developed countries actually tied their currencies directly to the value of gold.
Ah, the gold standard. I've heard of that.
Right. The idea was that it provided stability. A certain amount of paper money was guaranteed to be convertible into a specific amount of gold held by the government.
But then came World War I. How did that shake things up?
Big time. Wars are incredibly expensive. To pay for the massive costs, many countries had to print a lot more paper money than their gold reserves could actually back. So they abandoned the gold standard.
And their currencies lost value?
Sharply, yeah. The U.S., though, entered the war later and, importantly, suffered less damage at home.
And then after World War I, and especially after World War II.
Well, the U.S. emerged as a major, maybe the major, economic power. Countries needed to rebuild, desperately. The U.S. became a primary supplier of goods and also a major lender of money.
So everyone owed the U.S. money or needed U.S. goods?
Pretty much.
Yeah.
And as countries bought supplies and took out loans from the U.S., they paid the U.S. back, often, with gold. By 1947, the United States held a huge majority, some say almost 3/4 of the world's official gold reserves.
Wow.
So the dollar, which was still tied to gold at that point, looked incredibly stable compared to currencies in all these war-torn countries.
So the economic shift after the wars really set the stage.
Exactly, and it led directly to this really pivotal moment in 1944. As World War II was winding down, representatives from 44 allied countries met in a place called Bretton Woods in New Hampshire.
Bretton Woods, okay.
Yeah, they wanted to create a new system to manage money exchange rates after the war. They desperately wanted to avoid the kind of currency chaos that happened between the wars, which had really hurt international trade.
So what did they decide there?
They created a system where most countries would peg or fix the value of their currency to the U.S. dollar. And in turn, the United States promised to peg the value of the dollar to gold at a fixed price. It was $35 for 1 ounce of gold.
So other money was tied to the dollar, and the dollar was tied to gold.
You got it. This basically made the dollar as good as gold for international transactions. It created for a while a pretty stable system for trade and investment to recover.
That sounds like a solid system.
No.
Stable, predictable, but it didn't last forever, did it?
No, it didn't. By the late 1960s, the U.S. was facing increasing financial pressures. Part of it was government spending on things like the Vietnam War and social programs. The U.S. was printing more dollars.
More dollars than gold to back them up.
Exactly. The amount of dollars held by foreign central banks grew much, much larger than the amount of gold the U.S. actually had in its vaults to back them at that 35-ounce rate. Other countries started to get nervous.
Understand.
Yeah. They started asking the U.S. to convert their dollars into gold, which the Bretton Woods rules technically allowed. The U.S. was starting to run low on gold relative to all the dollars out there.
So that put the U.S. in a really tough spot.
It did. So in 1971, President Nixon made this landmark announcement. The U.S. would no longer convert dollars into gold for foreign central banks on demand. Poof.
Just like that.
Just like that. It effectively ended the dollar's link to gold, and with it, the whole fixed exchange rate system set up at Bretton Woods kind of collapsed. From that point on, most major currencies began to float.
Float, meaning their value just goes up and down based on the market.
Right. Determined by buying and selling on the open market supply and demand rather than being fixed.
But, okay, the gold link was gone, the fixed rates were gone, but the dollar somehow stayed on top. How?
It did, yeah.
Yeah.
Mostly because the system built around the dollar was already in place. The correspondent banking networks we talked about.
Yeah.
The sheer habit of using dollars for trade and reserves. The huge volume of dollars already circulating globally, and, critically, the size and perceived strength and stability of the U.S. economy and its financial markets. All that meant that even without the gold link or fixed rates, the dollar remained the easiest, most accepted, and most liquid currency for international business. The inertia was powerful.
Okay, so the history shows how it rose. Now let's talk about what having the world's most important currency actually means for the U.S. and for other countries. It gives the U.S. a lot of power, doesn't it? You hear terms thrown around.
It definitely gives the U.S. significant advantages, yes. It's often referred to by economists and critics as an exorbitant privilege.
Exorbitant privilege. That sounds like a pretty sweet deal, I have to say.
Well, in some ways it is. One of the biggest benefits for the U.S. is that it's generally easier and cheaper for the U.S. government to borrow money.
How so?
Because countries, businesses, investors all over the world need and hold dollars. They also need safe places to park those dollars, right? U.S. Treasury bonds, essentially IOUs from the U.S. government, are seen as one of the safest investments in the world.
Okay.
This creates huge global demand for these U.S. bonds. And high demand means the U.S. government can borrow money at lower interest rates than many other countries have to pay.
So the world's need for dollars helps fund the U.S. government's borrowing more cheaply.
That's a big part of it, yes. It also gives the U.S. a lot of leverage in global finance. Remember how we said international dollar transactions often pass through U.S. banks?
Yeah, the correspondent banks.
Well, that means those transactions technically fall under U.S. laws and regulations.
And that's where things like financial sanctions come into play, right?
Exactly. The U.S. can use its control over access to the dollar system as a potent foreign policy tool. It can effectively block individuals, companies, or even entire countries from using the U.S. banking system.
Wow.
Which means they can't easily make or receive payments in dollars. This ability has been used, for instance, to target terrorist financing after 9/11, or as economic pressure against countries like Iran or North Korea. It's like being able to cut someone off from the main highway of global finance if they rely on dollars.
That is a very powerful tool. But are there downsides? Costs for the U.S. itself and having this dominant currency, it can't be all good.
No, there can definitely be drawbacks. For one, the strong global demand for dollars often keeps the dollar's value relatively high compared to other currencies.
A strong dollar.
It sounds good.
It's good if you're an American buying imported goods or traveling abroad, sure. But it makes U.S.-made goods and services more expensive for people in other countries to buy.
So it can hurt American companies that sell things overseas?
Yeah.
Exporters?
Exactly. It can potentially hurt export industries and maybe even lead to job losses in those sectors. Also, some argue the U.S. economy has to sort of absorb global imbalances and capital flows, which can contribute to things like large trade deficits and increasing U.S. national debt. Okay, so it's not all benefit for the U.S. side. What about for other countries? What are the implications for them relying so heavily on the dollar?
Well, for other countries, using the dollar is often convenient, as we said, because everyone accepts it. But being highly dependent on it can create vulnerabilities.
Like what?
For example, if there's a global financial crisis, like in 2008, or even sometimes during the pandemic, there can be a sudden rush by everyone to get their hands on dollars of flight to safety. This can cause a dollar shortage internationally.
A shortage?
Yeah. Businesses in other countries that need dollars to pay their suppliers or maybe repay loans that are denominated in dollars can suddenly find it very difficult or extremely expensive to get hold of those dollars they need.
I remember hearing about that during parts of the COVID pandemic, actually.
Yes, that's a good recent example. Even as economies worldwide were struggling, the dollar actually strengthened significantly against many other currencies because investors were seeking safety.
So if you're a business, say, in Brazil, selling locally in Brazilian real, but you have to pay for imported parts in dollars.
Exactly. If the dollar suddenly gets much stronger, it costs you way more in your local currency to cover those dollar costs. Your costs just shot up through no fault of your own business operations. That's foreign exchange risk. And it's magnified when you're reliant on a currency you don't issue.
Okay. So given those risks and maybe the political discomfort with U.S. financial power, it makes sense that other countries might be looking for ways to, rely less on the dollar. Is that actually happening?
Yes, definitely. The idea of de-dollarization has become a much more discussed topic in recent years.
What's driving that push now?
It seems to be a combination of factors. As we discussed, some countries are definitely uncomfortable with the U.S. using its financial power, particularly through sanctions. They see it as weaponizing the dollar. Others are simply seeking greater economic resilience and independence, wanting to be less tied to U.S. economic policies or downturns. And of course, as other economies grow larger, think China. For example, they naturally want their own currencies to play a bigger role on the global stage. It's also about national prestige sometimes.
So what are some of the things countries are actually trying to do? What are the alternatives being explored?
It's really a mixed bag of efforts, and none are simple.
Mm.
You see some countries trying to make trade deals directly in each other's currencies, bypassing the dollar. Maybe India and Russia trading in rupees and rubles, for instance, or some EU countries exploring Euro-based systems for trade with specific partners.
Okay.
You also have groups of countries like the BRICS nations, Brazil, Russia, India, China, South Africa, and now others. They're exploring ways to trade more among themselves using alternative payment systems. They've even talked very long-term about the possibility of a common currency, although that's incredibly complex politically and economically.
A BRICS currency. That would be huge, but yeah, sounds difficult.
Very difficult. China, specifically, is actively promoting the use of its currency, the yuan or renminbi, in international trade settlements and as a reserve currency held by other central banks. They're making slow progress. Some countries are also increasing their holdings of gold again as a reserve asset that isn't tied to any single country's policies. And then there's talk about central bank digital currencies, but those are still very early days.
So there's definitely a push, lots of different ideas floating around, but are any of these alternatives really close to replacing the dollar's global role anytime soon?
Honestly, right now, no. While all these efforts are real and worth watching, the US dollar's position is incredibly entrenched. It's sticky.
Why is it so hard to replace?
Well, no other currency or system currently offers the same powerful combination of factors. You need a massive, relatively stable, and open economy behind the currency. You need extremely deep, liquid financial markets, especially for government debt like U.S. Treasury bonds, where people can easily park huge amounts of money safely.
Right, the safe haven aspect.
Exactly. And you need the long history of trust and the established infrastructure like those correspondent banks built up over decades. Alternatives often face hurdles like maybe their currencies aren't freely convertible, or there are concerns about political stability or government control over the financial system in the issuing country. Or simply, their markets just aren't large enough or deep enough yet to handle the sheer volume of global transactions the dollar handles every day.
So the dollar's dominance is still pretty solid, but maybe being chipped away at the edges.
That's a good way to put it. The dollar's dominance is still very significant, undeniably. But it's plausible, maybe even likely, that we'll see its share of global influence perhaps shared a bit more broadly in the future, especially if these alternative systems continue to develop and gain trust over the long term. It probably won't be a sudden collapse, but maybe a gradual evolution.
Which brings us back to the big picture. Why does all of this, the dollar's history, its power, the exorbitant privilege, these challenges, why does it matter to you listening right now? Why should you care?
That really is the crucial question, isn't it? And I think understanding the dollar's central role helps you understand so much of what's happening in the world. It sheds light on why global economic news unfolds the way it does, how international politics and finance are so deeply intertwined, and even how the price of goods you buy every day, from the gas in your car to your morning coffee, can be indirectly influenced by the value of the dollar and the dynamics of this whole global system.
It's like a fundamental piece of the modern world's operating system almost.
That's a great analogy. Once you sort of see how it works, a lot of other things start to click into place. It helps make sense of headlines that might otherwise seem disconnected.
It really does connect a lot of dots you might not have realized were linked before. As we wrap up our look at the dollar's global journey today, what aspect of this whole story stands out most to you? What's the most surprising or important part?
For me, I think it's the sheer resilience of the system that got built up around the dollar, particularly after Bretton Woods ended.
Yeah.
Even when the official rules changed, the infrastructure, the habits, the network effects, they were so powerful that the dollar just kept going. It really shows how powerful inertia and established networks can be in finance and economics.
That's a great point. The system itself kept it dominant. So the dollar's path to becoming the world's main currency was shaped by these huge historical moments, and its continued importance really does impact global economics and politics in profound ways, affecting countries and, yes, individuals like you listening. It's clearly a complex system with real advantages for some and real disadvantages or risks for others. Okay, here's where it gets really interesting, maybe something to chew on. If we look far out, maybe decades from now, and imagine a world where the dollar's global role does slowly lessen, maybe it starts sharing the stage more significantly with other currencies or systems, how might that fundamental shift change the global balance of power? How could it reshape the world economy that you were a part of every single day?
That's the multi-trillion-dollar question, isn't it?
It really is something to think about. Thank you so much for joining us for this exploration today. We genuinely love to hear your thoughts on the dollar's global journey and its future. Share them in the comments below. And of course, be sure to subscribe to Marginal Thoughts for more unpackings of the world's fascinating ideas.